Hey, what's going on, guys? Welcome back to the channel. And in today's video, we're going to be talking about the mecca of dividend investing. And if you haven't heard to it referred to as the mecca of dividend investing, well, it's probably because I just made that up. So if you haven't put two and two together, we're going to be talking about monthly dividend paying stocks. I actually picked up 2 new positions into some monthly dividend payers. I'll talk about my thought process and how to actually value these dividend stocks. Because when you look at the stock market, when you look at growth stocks, it's pretty easy to look at the price today versus where it was 5 years ago. But maybe you're wondering, hey, how do I value dividend stocks that have been paying dividends consistently for 5 years? You know, obviously you have the growth on the market, but how do you factor in those dividends? Well, I'll show you exactly how to do that in this video here today. So without further ado, let's jump right in. All right, now listen, if you guys are brand new to this channel, you're just coming here for the first time, well, I want to say welcome. My name is Dalton. This is dlitztv, and hey, on this channel, we talk about all things investing. If you've been here before, you know that my overall #1 goal is to be able to live financially free by having my dividend income be able to cover my, monthly expenses. And one of the best ways to do that is to obviously invest in dividend companies. So I have been adding to my portfolio. I want to discuss some of those moves in this video, but one of the most important things that I factor into whether or not I make an investment into a company is looking at how well they've performed in the past. I feel like the history on stocks is a really important as a past indicator on where that stock may be headed. And again, failing stocks can turn it around. They can do well, but generally, if you're looking at dividend companies that have been well established, that have been paying dividends for a while, it's just interesting to look back, focus in, and hone on exactly how they've been doing. So one stock that I have been considering adding to my portfolio for a very long time, as you guys may already know, is one that is known as Prospect Capital. The ticker symbol for them is PSEC, and I actually did decide to pick some up. And my thinking behind it is, well, first off, the company is pretty well established. They've got over $6 billion in assets. And I look for those companies that, don't have less than $1 billion in market cap. So they fit well within that range. They've funded, basically they're a business development funding organization that has funded over 365 different investments. So they've got a really nice track record going on. And they've paid out over $3.4 billion in dividend payments alone. And so you might be looking at that and you might be a little bit worried about how their stock is performing. So let me just jump right into the Robinhood app and give you guys some background knowledge around that. All right, so as you can see, I jumped into the stock chart for Prospect Capital. What I'm going to show you is the 5-year return on this, and you're probably going to be severely underwhelmed. You can see only 15%. If you invest in total stock market index tracer, you're going to get around an 8 to 10% return annually. So why would anybody like me want to invest in something like this? Doesn't it look crappy? Well, up front, it doesn't look like it's great, but you got to remember, hey, those dividend payments really make a difference. And you know what's great is you can also reinvest those dividends and continue growing the portfolio. So let me show you how I actually calculate these. But before I do, let's take a quick look. This is my current position. I spent $500 on this today. Picked up a whole bunch of shares, around 61 shares total is what I have in my portfolio. And so let me jump in. I'll show you how to calculate and how to figure out what the stock has actually returned, even though it's paying out those dividends. So jumping over to this screen right here, you can see this is Yahoo Finance. Yahoo Finance has a lot of great information. I already searched up Prospect Capital. You can see PE ratio, their beta. You can look at their dividend yield, 8.27%. And for me, in my mind, that's pretty attainable for PSEC. Let me show you actually how to factor those dividend payments in to understand the actual return you would have got on your investment. I'm going to click historical data. It's a tab right there at the top, and it takes you to this screen right here. Now, I'm just going to change up the time period, go out 5 years. We're going to go to frequency, put monthly. It's just going to keep it clean, hit apply. These are the numbers that you should be concerned with right here. So a lot of great stuff. This is just showing the historical data. And if you look at here, you can see that the price recently closed at $8.71. Now the adjusted close, that takes into consideration dividend payments and other information as well. So that's what I want you to focus in on for this this portion. So remember $8.71. And then I'm going to scroll down to the bottom and you can see that, the close price price was $7.82, but that adjusted close price is $4.35. Okay, so remember $4.35. Now what I'm going to do is show you how to calculate that true return that you would have received. I told you we had the $8.71 adjusted close price most recently. You just divide that by the far out, that 5 years ago, 4.35, and you're going to get, that shows, that represents nearly 100% return on your investment if you had invested 5 years ago and just held on. And so if you look at what's that return yearly, we're going to take a quick look at the coefficient, go with 0.2 because each one of those years is 20%. And so we're looking at a 14.8% return year over year on your investment. So it's all looking pretty solid with something like Prospect Capital. Now, one of my all-time favorite monthly dividend-paying companies that I have been investing with since I started this portfolio is Realty Income. They're quite literally known as the monthly dividend-paying company. There is a lot of great information you can pull directly from their website. I'll just slowly scroll through it, but really my favorite part about this company is, number one, they're a real estate investment trust. They're required to pay 90% or more of their profits back to shareholders in the form of dividends, and they're also extremely diversified. You can see they have 6,600 plus net lease agreements on long-term properties. And all of their buildings, I believe, are, less than 10 years old. So there's less maintenance, less required work, and a lot less effort that needs to go into managing them. The other thing that's really great is their triple net leases on a lot of these properties, which means that the company itself, Realty Income, isn't responsible for, some of the maintenance or some of the taxes that come into play. So it's really like they're renting out their property and their hands are wiped clean and they're just collecting rent, collecting money coming through. If you look at their portfolio, just to get a little bit of a bigger look here, 98% of it is occupied right now. And again, a really great idea to just kind of scroll through the websites for these companies. If you want to look at their top 20 clients, they have it listed here. You can see just how diversified they are, not only in different industries, but exactly like the companies that they're investing in. Everything is looking pretty solid. Walgreens, 7-Eleven, Dollar General, FedEx, Dollar Tree. These places pretty much need physical locations no matter what's going on. Whether there's a pandemic or not, they're going to need some operations in these different manufacturing sites, these different warehouses, and they're in a lot of different industries. So it's not like they're very food and beverage heavy. You can see they have things like AMC Theaters right here, which obviously took a hit because of the whole pandemic. But again, they're so diversified that it hasn't really mattered all that much for them. Now, staying on the topic of real estate investment trusts, we're looking at Stag Industrial. This is another one that today I put $500 into. If I scroll down, you can see my exact position right here. This is one that I am really happy that I've gotten into. I've been watching them for a while, and if you look at them, they've got around a 4% dividend yield. They are a real estate investment trust, once again, like I had mentioned. But what I really like about this company as well is that if you look at them out in the future, they have a pretty solid build up for their portfolio, right? Around 40% of their portfolio consists of e-commerce. And so what that means is I think that we've had this big shift into e-commerce, and everything going on with the pandemic, and what we might see trending going forward is a big, push for e-commerce continuing. So having that backing, having that all structured out and set up for something like Stag Industrial, that is a really great opportunity to get in. Around $7.3 billion is what their assets are, and they have over 490 buildings. So you're getting a lot of diversification with them as well. But again, like with that e-commerce heavy sector, I think that this is a decent opportunity as well. Now, just like PSEC, let's take a quick look at the actual return that they've seen on the stock market over the past 5 years. So you can see their adjusted close price most recently is $36.43. So then if I scroll down and we're going to take a look at their adjusted close 5 years ago, was $18.41, so 1841. And what you're going to find is they've got over a 97% return, close to a 98% return on their investment if you had invested 5 years ago. And so looking at that year over year, again, cool to look at, 14.6% return year over year. Everything is looking pretty good for these two companies, so long as they continue on the current trajectory. And just to show you guys, one of the largest holdings in my portfolio is in a dividend a monthly dividend paying ETF known as SPHD, which is a high dividend but low volatility ETF. This means that it targets those companies that are paying high dividends that aren't fluctuating as much as the market. You know, if the market has a huge jump, maybe it's not going to jump as high as the market. I'm perfectly okay on missing some of those gains, but if the market absolutely tanks, it crashes, it's theoretically not going to go as low as the market crashes. So that's why I really like this investment. I'm rather conservative when it comes to my money, and I love seeing the cash flow, and that's why I kind of look at those dividend companies as well. So if you scroll down, actually, I want to show you guys just to be clear on what actually happens when you are open about your investments online. You got a lot of criticism out there. People are saying you're crazy. So many people were commenting when I was talking about how much money I was putting into this investment and how it was a big focal point of my portfolio. People were saying that I was crazy. If you look at their performance over the past 5 years, you'd somewhat understand just looking at that small return. You know, over a 4 or 5 year period, you're only getting around 8% on market cap alone. Now you can go back to the other site, and I think it was relatively not a great return, maybe 6 to 8% return. I looked before overall, and then you're going to notice this huge gap right here. Well, hey, if you're investing in that huge gap and you really think that these are going to bounce back, that's a great opportunity to get in. So if I scroll down, you're going to notice on market cap alone, market capitalization, I've gone up 26.47%. I was able to make a decent amount of money just off taking advantage of that dip in the market. Now, on top of that, I'm also paid dividend payments. So I was able to, theoretically, if I sell this, I'm going to get a 26% return, and I've been capitalizing on all these dividends. It's looking pretty good for me in this portfolio with this investment. Very comfortable here. Again, overall, putting my money in the stock market, investing in stocks like this, ETFs like this, you know, way better. I've got a way better return than I would if I just kept it in the bank. And so many people don't realize that investing your money is important. It's the only way that you can truly, in my mind, achieve financial freedom. So that's why I kind of make these videos. I try to get you guys interested in, I guess, dividend investing and investing in general. I don't think you necessarily need to be a dividend investor. I have other portfolios as well. I've got growth portfolios. I've got a number of different ones, but that's pretty much it. Now, let me know, are you guys invested in any monthly dividend companies yourself? Do you have any suggestions, some that you've seen a pretty good return on, some that you are adding to your list? I'd be eager to know. Please leave a comment in the comment section down below. And anyways, guys, thank you so much for checking out this video, and have a great day.